Hello, welcome back. Looks like we're gonna be having another deep red day today after we heard the news about Russia invading Ukraine. Now, typically these kinds of news are obviously horrible, but for the markets, they don't tend to have a lasting effect. However, what tends to have a lasting effect is growing inflation, for instance, and that is a thing that is happening in the US, and hopefully that can be managed. But for now, we can hope that the war will eventually dissipate, and no lives are going to be lost. But what happened today is that Alibaba reported its earnings. It had its earnings report, and it's actually better than what I thought it would be. But we're gonna go through that. And opening the market, we are expecting Alibaba to fall like the rest of the stocks. This is probably going to happen regardless, because right now the Nasdaq is down like 3% or something. So even if you have okay earnings, you're probably going down today. So that doesn't worry me at all, really. Now, before I proceed, thank you for being here. If you're not a subscriber, you may want to become one. And please like the video as well, because that really helps the channel grow and helps me make more videos for you. So let's take a look at what's going on here, and we're gonna compare it to the financials and the revenue that Alibaba was having in the previous years, just to point to some things, the key points actually that came out from the earnings report here. And bear in mind that there are still some things coming out from the earnings report. So we may eventually end up having another video a little bit later. This is breaking news. So Alibaba reports slowest ever revenue growth, and that's the biggest thing here, really. And you will see here that they have reported a 10% revenue growth in the slowest quarterly year-on-year growth rate. And again, that's a quarterly revenue growth. And you will see here, if we take a look at Alibaba, we can take a look at some previous quarters starting from 2017. And you will notice that the revenue growth of the company was sitting at 60%, 55%, 60%, and then kind of, keeping up, but going down to 40%, 37%, 22%, 33%. And you will see here that we are nowhere near 10% in any of these quarters, and this is what kind of spooked investors a little bit. Now, it doesn't spook me at all personally, because the company is already very large. I mean, it has a $300 billion market cap, and that's massively undervalued right now. And so we are literally talking about billions of dollars for this company, and it's making enormous cash flow. It's huge. It's a behemoth. And so you can expect to have a little bit of a slowing growth. I mean, you will not have a company that's going to be making 40% revenue growth a year forever. That's just not going to happen. If a company did that, they would eventually surpass the economy by miles. And so that cannot happen. Every market and every company will eventually slow down at some point. And that doesn't worry me at all. And you will see here that Alibaba has been facing macroeconomic headwinds. We knew about that as well. And this is a key point that has really caused issues to Alibaba. And especially, the Chinese government has actually really caused trouble for Alibaba last year, where they lost like 50% of their stock price. However, their financials remain super strong, and we have analyzed them deeply in the previous videos that I've made. And buying Alibaba for me is an absolutely awesome idea right now, just because they are making tons of money and their stock price is very low. And this is why I bought myself. I think it's a no-brainer, really. So what's next here? Here's how they did in the fiscal third quarter versus Refinitiv consensus estimates here. Now, they did 242.58 billion, which is 38 in dollars. This is in one. It's actually reported in one. But you will see that the estimated was like 4 billion more, which is not $4 billion. Again, it's 4 billion one. And it did less than what was expected, but still it's a 10% year-on-year rise. So there is a rising revenue. It's not going down nor anything. It's just not going down, not going up as much as they would hope for it to go up. So the EPS that was reported is 16.87. That is the earnings per share for the company, versus 16.18 that was estimated. So actually they beat on this estimate, the EPS estimate. Still a 23 year-on-year fall, but percent, but that was expected. However, they did better than expected, is what we're seeing here. And the article still, goes through and talks about the fact that we talked already, the fact that the 10% revenue growth is the slowest quarter. But again, does this worry me? Not really. I mean, all big companies at some point will have slowing revenue, and especially in this kind of market, and due to the pandemic and all that. I'm not really surprised at all that this happens, and it doesn't really scare me at all as well. And some other things that are discussed here is that the fact that the stock price has fallen a lot, of course, because of some issues with China for the most part. But we do expect Alibaba's core commerce revenue, which is like CMR, to come in at 222 billion won, according to Refinitiv estimates. This is some things that we don't know yet. It's the company's forward guidance, for example. We are still watching on that, and again, I will report as we get more about that. And because this is live, this is going on right now. So yeah, that's what I wanted to tell you about in this video. Just give you a quick update on what happened, on what's happening right now with Alibaba. You will see that this is live. You can actually watch it right now. And as I'm learning more, I will actually make another video later. So stay tuned. You can also subscribe and wait for the next video. And we will discuss a lot more about Alibaba for the upcoming quarter and what they did for guidance and all that. So thanks for watching this one. Stay tuned and like the video, please, because that helps. And I'll see you in the next one, guys. Thanks for watching. Bye-bye.